Good morning, everybody. It is Thursday. It's a little bit, just a little bit less than halfway through the trading day, and we're getting a little bit of excitement here. As you can see, Dow's off 161 points, a little over 1%. Nasdaq down 1.63. Uh, and you're seeing some leading stocks, a lot of which got extended, in my view, over the last few days coming in. And so right now what I'm doing is watching my stocks and down a couple of percent. My own portfolio doesn't really cause me to really do anything just yet. I do think, though, if you look at the market here, I don't know who's bothering me here, but I'm going to shut this down here. Give me 1 second, everybody. Assuming everybody can hear us okay. But, you know, what I'm trying to do is sit tight here. We were talking about a number of stocks, pocket pivots, viable gap ups, and things like Mellanox. We even discussed the lows of FB, Facebook last week being similar to eBay, and so far that has panned out similarly, but not exactly. So I think the situation has to be monitored on a dynamic basis. But here's what I see happening. So I'm not, the market's coming off hard. In a way, I'm almost saying thank you because I think we need this if we're going to set up a better rally going forward. I should also point out the market direction model goes on a buy signal. It's a buy signal. It's a directional model. It's not an inflection point model, so it doesn't mean that you'll get a buy signal necessarily any more than you would get a sell signal, and everything's going to move in your direction right away. And in this environment, I would expect that it's not going to. So I almost jokingly said yesterday what we should do is short the market here and then turn around and go long after it comes down a couple of percent. And I think, Dr. K, you were thinking the same thing yesterday, that we need to see a little pullback of 1 or 2%. It's like, okay, so be careful what you wish for. We got it today. Volume is up, and you're seeing the NASDAQ index, which I'm going to blow up here a little bit. So I'm just showing you guys my main screen here because I want to keep track of things as we go through today's webinar. Because for those of you who watch the new show Turtle Man, which my kids seem to have fallen in love with during the summer now that they're out of school, this is live action. Anyways, any Turtle Man fans out there? Yeah, you guys are all probably too sophisticated for Turtle Man. But in any case, the guy's job is to run out, and when people have vermin or some other rats or snakes or whatever infesting their house, they could send for Turtle Man to come in and fetch them and get them out of there. So we like Turtle Man, but to me this is live action, so I'm keeping track of the market so you can see. This is my main screen and shows some of my positions and things I'm watching this morning. We'll get to some of that later. But if you look at this, the market, you made a low here right at the 200-day, and of course this was a big sell signal. So let's go back a little bit and kind of think through this and remain a little bit rational here and see where we're at and where we've come from before we start jumping to any conclusions, okay? And the first is that you undercut this low here, and you break the 200-day moving average. I remember that weekend, that Friday, we broke right here on this particular day. Oh, let me bring up my little gizmo here. On this particular day, let's bring this gizmo up too. This day was a Friday, and of course articles over the weekend that the market has broken a critical level of support at the 200-day moving average, and it's over with, and everybody goes short. But what happened is you faked everyone out and you turned back to the upside, and then you went straight sideways for about a week, about 6 days here. It's very choppy action. Remember last week we thought the market might be rolling over right here on Thursday because you were picking up volume, and you saw this pattern every day, at least on the NASDAQ, where volume picked up every day of the week at that point, and the market reversed the opposite direction. So every day it was telling you, I'm going in this direction on more volume than yesterday. So it starts to look positive when it's up because it's trading up on more volume than yesterday, and it looks negative when it turns back the other way because it's trading more volume and it's down. And it was doing that until we got to a week ago, pretty much exactly a week ago, last Thursday, where you had a big upside move on big volume, which is, to me, this is follow-through like, but my view is if it's close enough for a follow-through, and I see stocks that are in position to buy, and I would point out that right now I'm long Facebook, Mellanox, and LinkedIn, and you can see them up here. And I'm sitting right now. I don't know if I'll blow these things out at the close. We'll see how this market progresses through the day. But a lot of bad news. The Philly Fed was, as we were saying to ourselves early, outright fugly. And I won't get into any details on what that means. You should know probably. You see the market coming down, the volume's up, and you're pulling down on top of this area here. And it's, if you look at this move here, you got a straight up move here, you go sideways 6 days. Now you got a straight up move here. You're at the 50-day moving average, which is a logical area to see a little bit of resistance. And even if you do get above it, yesterday looked constructive because you had the Fed come out and they didn't announce, that we're going to do QE3 and hurl a bunch of money at the liquidity at the markets here, and so things started to sell off, but the stocks stabilized. Now today there's some news coming out of Germany. Dr. K, did you see anything at that? You're in London right now, right?
Yeah, I mean, there's been a slew of negative news today that's pulling the market down. I mean, not just over here in Europe, but also with the just the concerns in general that gold is below 1,600, oil's under 80, and UK is in recession. More than half the eurozone countries are in recession, and just the idea that the economy is going to be slowing down faster than anticipated, combined with the Fed not giving the market QE3 yesterday. It's just more, I think it was $267 billion in additional Operation Twist funds.
Right,
and
right.
that really was a disappointment to the market. It quickly sold off after Bernanke made his announcement.
Right, and then recovered. So,
yeah.
And I think it's key. To me, that was a clue that I think the market is worried less about QE, and what we're seeing here is what we might call a Romney rally. And I thought that was funny that yesterday when we sent out the market direction model email that talked about a potential Romney rally, you get an email back about how terrible Romney is and be careful what you wish for. And I mean, my view is he couldn't be any worse than Obama, and so far we're all still alive after 3.5 years of that. But forget about the politicians. I really don't care much for Republicans or Democrats myself as a libertarian. To me, they're all just big liberals and statists and socialists providing welfare to corporations and individual interest groups, sort of on an ad hoc basis. So I don't really see them as any different. What we're talking about when we talk about a Romney rally, it's not that we're wishing and hoping that Mitt Romney gets elected president. Personally, I'd like to see the Libertarian candidate get in, but that's just me. What we're talking about is going back to historical precedent, and that is the so-called Reagan rally from April 1980 into November, and that rally occurred in the midst of what was not really a great market environment, but the market was starting to sense potential change, and we were in a malaise back then. For any of you who were alive back then, I was in high school, and I remember Jimmy Carter getting on TV with this little weak-looking little wimpy sweater that he's wearing, and telling us all that we need to get used to the fact that our standard of living is going to be lower than our parents, and I think that's probably the only time in my life that I flipped the bird at a television set. But that was when I was 17, and probably a lot more of a jerk than I am now. But some might debate that. But in any case, I think if you look at that, that's potential here. And if you look at where's the crowd sort of leaning right now, I sort of see everybody as being relatively bearish. Everybody knows the end of the world is here. So they're all preparing it by stocking up on food that the mobs will steal from them when things do actually hit the poop fan. But in any case, a pullback here I think might be constructed depending on how it plays out. And so what we do is watch our stocks. And I think primarily you're seeing a lot of stocks had run up, and now they're getting some well-deserved pullbacks as they kind of retest, or actually not retest, but digest their recent gains. And I think you have had some stocks identify themselves as leaders, and you need to watch your stocks. So I'm watching my stocks today. I'm down like it's been anywhere from 0.9 something to 1.94%. I'm watching it move around. And so I'm watching my stocks. I'm not getting all freaked out. And I did act on this follow-through type action in here. Actually, Thursday was enough to get me going long some stocks. And on the basis of, I don't really care. I know the model operates on a certain way, and that's what the model does. But when I operate with stocks, just show me some stocks to buy, and show me a market that looks like it's following through. I think in this environment, we're in a very anomalous environment. So 1.29% move in the NASDAQ index on higher volume on this particular day. Given the extent of the volume, even though it was triple witching, but notice it wasn't a fake out because you're still higher from Friday. I think that it was viable. And so while the market direction model doesn't take that signal, I think that was viable on a stock basis or a stock-by-stock basis. And now you do have a trend. So the market direction model goes to a buy yesterday, and that seems logical to me. I mean, I think you pull back on top of this area. Maybe you pull down to the 10-day moving average, which right now is somewhere around 28.67 for the NASDAQ. And that's kind of what you're looking at here. So you don't want to panic. Definitely don't want to panic. You kind of want to see how this thing pans out, because this could be a constructive pullback. I think the market might start to see a Romney rally or potential for change in policy, and I think everybody knows that Europe is screwed, and you even have Berlusconi. Is he still the PM over in Italy, Dr. K?
I don't ask me. I can find out real fast, though. I
Yeah, I
believe
think
so, but I don't
he
keep
isn't.
track of
No,
these
but he was saying
politicians'
something.
names because the names really don't mean anything to me, and it's almost like I don't even want to
Yeah,
clutter my head with those kinds of facts.
yeah, I'm with you on that. But he said something about it might be good for Italy to leave the euro, and any of these countries with floundering debt problems and economies should leave the euro because they can inflate and print currency and inflate their way out of their mess. And he's right. I think if you saw Greece leave the euro, maybe that would be a good thing. And some even say, like Mark, what's his name, Mark Faber, the great Swiss economist, thinks that you'll see Germany leave the euro before anybody else does, because Germany will get freaked out. But I think one thing to think about: Europe slowing down. I still think the U.S. has the potential to lead here. You just go down my list of symbols here, and you show me any of these great companies: Amazon, Intuitive Surgical, Apple, Microsoft, Google, Priceline. Baidu is a Chinese company, but it was funded in the U.S. By venture capital in the U.S. Intel, Netflix, just any of these companies. Mellanox, LinkedIn, Facebook, Monster Beverage, Coinstar, Questcore, Splunk, Ulta Salons, Equinix rather. All these companies. How many of these companies are in Asia or Europe? Well, zero. So I think that you will see money possibly flow into the U.S. as a safe haven in terms of the U.S. having the potential to withstand some of the pressures that you're seeing lately. Another thing to keep in mind is I think countries, when they start, and Dr. K, feel free to jump in here if we want to debate any of this, but there's a lot of talk about, we're going to be becoming Japan 2.0, and the one thing that I think should be taken into account here is, number one, the U.S. is a large resource-rich country, and so it can produce resources, and similar to what Canada has done, I think the U.S. could decide to start to capitalize on the resources that we have and begin to produce more of those in order to cut down on oil exports and thus decrease our current account deficit. So I think that's what the U.S. has in its favor. The other thing is the U.S. has the biggest guns, and I certainly don't want a guy with a massive machine gun in my face being the guy who owes me money. Because if he doesn't want to pay, well, he's got bigger guns. Now, if we don't want to pay out the Chinese, we'll have to see what happens there. But I don't think that the Chinese military is as much of a threat or shall we say, a gargantuan or behemoth, a juggernaut that needs to be feared so much. But anyways, those are some of the dynamics, okay? And that all also dovetails with when I talk to people or people ask me, well, if the society and the financial system crashes and everything turns into chaos, what should I do? Do I need food? Do I need gold? Well, I think if you smugly stocking up on food, you're just going to become a supply depot for the mob. So you got to consider that. And I think in a financial crisis or a societal crisis, I think people should pull together rather than turn on each other. But the common wisdom is that we would have a crisis and then people would turn on each other. And I don't think that's true. I have more faith in the human spirit. I think you do too, Dr. K. In that, I think you'll see people come together in ways that maybe they haven't before. So that's the optimistic, the hopeful case. But I think right now everybody's leaning towards not liking stocks and not liking the market. Yet when it comes to individual stocks, I'm seeing a little bit of a different story. So let's go through some of that. Let me change my chart here to a where we go? Let's go to a standard clean daily chart here. Put up my little cursors here. So let's just look at a couple things. Number one, we're talking about gold. And I think for now the trend in gold is off. There is no trend in gold. I'm not a buyer. I own physical gold from 300, and I'll keep that. Probably end up giving that to my kids by the time it gets back to 300. And I have no intention of really selling it. So, but on the other hand, we're not traders of gold, right, Dr. K? You're in a trendless consolidation, correct?
Yeah. So unless you're a very long-term holder, because gold is still, for all intents and purposes, in its 12th year of an uptrend. But these uptrends are, they're far and few between, but they have occurred for 12 years now, and gold is in a very long basing pattern, a well-deserved one because it had a big move in 2011, and it's not the first time this has happened. I mean, you can go back to 2008, and you'll see that gold was in almost a 2-year base before it broke out. So and then actually 2006 to 2007, that was a 1.5-year base. So right. Gold is no stranger to long basing patterns, but in terms of the fundamentals at play, there is no strong argument as to why gold has topped.
No, there's no strong argument to say that it's topped. I think for now there is no trend, and you might see in the short term, and actually in the intermediate term, if this Romney rally theory of ours is correct, you might see stocks outperform precious metals and commodities and as a disconnect. And I think part of that is because you may throw in the growth proposition. Remember that all of our government in the U.S. and in Europe they're bloated and just laden with debt to just ludicrous levels. Companies like Apple, Google, Microsoft, Intel, Netflix, you name a lot of these companies. You look at Facebook and LinkedIn, no debt. Two companies, social networking, no debt, pristine balance sheets. Companies are lean and mean, while governments are fat and disgusting and ugly and laden with debt. And so I do think if you had an inflection point in policy, companies are well positioned to capitalize and to move on that. And one of the subtle things I'm noticing here is that you're starting to see growth stocks perform again. And I think part of that tells you is that you're seeing a growth equation starting to pick up here, and that may be a clue. Now, the clues are subtle, and like I said, this is fluid, and you want to stay calm, and you want to assess things as they are, and not as you fear them to be or as you wish them to be, okay? And if I sound particularly focused today, it's because we're in this market right now, and we've actually been in long for a few days, and we're doing okay, and we're doing actually I'm up something like 30-something% just a couple, 3 weeks here, but I'm very focused on what's going on here just in terms of not allowing myself to get thrown off psychologically by news, by a bunch of red on my screen, and just focusing on what's going on with, number one, my stocks, and number two, how does this fit with what's happening in the indexes. Keep in mind that you can see sell-offs in the S&P and the Dow that are pretty hairy. Mainly because you have a lot of commodities-related stocks in those indexes, and also the Dow and the S&P have a lot of defensive stocks. The defensive stocks, consumer staples, utilities, and whatnot, have been some of the better performers, say, over the last month until recently. Okay, so the very subtle clues. So I'm looking for a shift here, and we'll see how it plays out. I think we're comfortable. If some of you bought into the Mellanox, for example, the pocket pivots there, or the Q-Core, Questcore pocket pivots, I think down here you're doing okay. But keep in mind, you're extended here, so you're entitled to pull back. I'd look for Questcore to come in to say the 10-day maybe, or the top of the base, which is here. But this is a decent cup with handle formation, and it's broken out. Now notice Questcore has not performed throughout 2012 as the rest of the market has, and it's set up in a decent cup with handle. And I think they're doing pretty well expanding markets for their drug Acthar. The thing is that for multiple sclerosis, Dr. K?
I believe so, but
yeah,
I think well, they're doing CNS research,
okay.
Drugs that treat CNS.
Yeah. So, and if you guys remember last week, what I tell you, like three themes. We got three themes we like. Number one, social networking, I think, is going to play into any continued market trend to the upside. Number two, new cloud. I mean, you're seeing stocks like VMware. Floundering. F5 is over here floundering. Salesforce is over here floundering. Meanwhile, we got these sort of new clouds like Equinix trying to break out. Mellanox having a big move. Yesterday, that was a viable gap up. It's a little extended, so it wouldn't surprise me to see it fill the gap and touch the 10-day moving average. Maybe the 10-day moving average moves a little higher. But to me, this thing, we were buying in here on the pocket pivots, and I remember I traded out of it and then bought it back. Last Thursday, I think, when the market was acting fine, it runs up real quickly, and you can add a little more here, and now you're kind of sitting with a reasonable position. I mean, the way I play it, I'm up to about 50, 60% now, and I do it in 20% increments generally, but that varies on what the stock is doing. And I actually would use this pullback today, or I'm looking to add to my position on this little pullback. We'll see how this pans out. But you can see that a lot of these stocks are up, and they deserve to take a break and get everybody scared, and that would work. So I'm kind of leaning that way. You look at Alexion Pharmaceuticals. We told you guys about the Bible gap up on Tuesday, and you have the gap up. So that is a viable breakout in my view. The low is 95.30. You're buying it here. Even if you bought it here, your risk is 95.30, 94.12 at the 10-day minimum, as I see it. Dr. K, how would you handle this one here? I mean, this looks fine to buy actually to me today. How about you?
It's a constructive pullback, so you have a second chance to get in if you didn't get in 2 days ago.
Yeah, and they're coming in nice. You had Cerner was another one. Biotech is my third leg of my three themes of our three themes rather, and you can see this is a little screwy. And my take on this is you had some decent action in here, but no real pocket pivots. I don't think. I think right here, kind of, but it's a little bit. I've never really liked the stock. To tell you the truth, it's always been squirrely. Every time I get into it, it runs up and then pulls right back very sharply. And you notice you have a breakout here, but it can't really hold the breakout. It's coming in. You got heavy volume today, so I'm a little bit suspicious of this one. I don't really care for it. Dr. K, you got any take on this one? Because I know a number of people own it.
Yeah, I mean it's the overall chart. If you look at that prior run up, it had in the other year, it tends to like to pull back to the 50-day quite a bit, and that seems to be what it's going to be doing now. And so, with these kinds of stocks, knowing that they tend not to obey the 10-day, you don't want to. You want to give them a little bit of room if you want to hold on to this kind of name. It's not my favorite kind of name though, just because of the price volume action in general. But it's a good stock. I mean, it's a good fundamental stock. So if you've got it, you have to define your selling parameters, and probably using the 50-day as your guide is the best way to handle this if you want to sit with it or have a shot.
What if you bought it at 85, Dr. K?
Then it depends on your risk tolerance. The 50 days way down there, it's probably going to violate your your maximum percentage loss. So I wouldn't be buying a name like this at 85 if your rules are such that you're going to use the 50-day. Now keep in mind, it's not going to. Usually these things don't go straight back down to the 50-day and then violate it. It's probably going to wiggle a bit, and that 50-day will have a chance to catch up with the price. And if it does violate it, it might violate it 2 or 3 weeks later at a price of say 82 or 81. And if you bought it at 85, that should be certainly within your risk tolerance level.
All right, thanks for that, Dr. K. Okay, let me see. What do I want to do here? You know what? I'm going to go through the stocks that we think are some of the better leaders here. And Dr. K, if you got anything to add to this, feel free to jump right in. But as Gordon Gekko said to Bud Fox in the first Wall Street movie, let me show you some of my charts now. And so here's I'm just going to show you what I'm long. And do me a favor, don't run around and tell everybody, okay? I'm long Facebook off the lows here. It's bought down in here. So we talked about, Dr. K and I have talked about how Facebook could be like eBay, which tanked 50% after coming public. There are a few dynamics that are different, but I see it as a big stock, social networking name, and I think if institutions have to be in social networking, which I think if we have a continued uptrend, they definitely are going to have some weighting in there, then I think these are the go-to names, LinkedIn and Facebook. So Facebook's moving up nicely for me, setting up in a little, they got some resistance here, so that makes sense. But the fact that the market's getting hammered and this stock is up 1.28%, I think is constructive for the name. It tells you that there is support for the stock. So I actually almost feel comfortable owning Facebook regardless of what the market does, which may sound weird, but I've done that one before. I owned Lockheed from September 2001 into, I believe, April or May of 2002, and I had a huge position, 500,000 shares, and the stock continued going higher regardless of what the market did. It almost seemed like the stock would go higher every time the market went down, so I almost would root for the market to go down. Maybe that's what Facebook is like, but you can get into a lot of arguments about, or say a lot of intellectualization about market caps and whatnot. But I do think Facebook having 71% of all internet users as their subscriber base, and that may be fudged a little bit, but even if they had 50, that would be fine. And 1/5 of all humanity on Facebook, the future is theirs to blow. Okay, the game is theirs to lose, and if they can execute and figure out how to monetize this, and nobody's really giving them any credit right now, which makes me think maybe they're going to surprise everybody. I think you just keep your eyes on the stock and forget about all the people who want to badmouth the company. So, I got to admit, I'm on Facebook. It's a little bit cheesy. Dr. K, you like Facebook, right?
Yeah, well, I mean, it's the leader in its space, unquestionably. I wouldn't compare, today with say 1998 when eBay came out, because that was
no, you can't do that, obviously, no.
And we talk about these U patterns, and for a U pattern to really work, it has to exceed its prior peak by like a factor of 5 or more. That's what makes the U patterns back then so particularly powerful. But I mean, in today's market, there's so few players to choose from. I mean, yeah, you got Facebook, which is the dominant leader, and LinkedIn is the follow-on, the very tiny little follow-on. I mean, the two websites, you can't compare the two. And Facebook has the potential to monetize hugely in cyberspace, given that it is a dominant player. And I think it was a Jarkissi interview. I talked about a few ways that they can do just that. I'm sure that they have these ideas in the pipeline, and in terms of why they haven't acted yet to monetize some of these relationships, it's anyone's guess. But keep in mind, these very, very smart people at the helm there, so I'm sure they have their reasons. And Facebook does not strike me like a MySpace situation, which was not run well, and very obvious deficiencies in MySpace were never fixed. Could have been fixed with basically a few days of programming code, and somehow it never was. But Facebook seems like it's always optimizing itself. It's always evolving. I use it to just simplify my life. I mean, a lot of people, I guess, it's a learning curve, using Facebook. But there's a lot of ways one can use Facebook to just optimize what they're normally used to doing outside of Facebook. And I'd also point out that Facebook had a Pocket Pivot. It was 5 days ago. And with Pocket Pivots and IPOs, they tend to work very well, especially if the IPO in question tends to be what you'd call a hot IPO. So I love the type of Pocket Pivot that occurs especially after the round. Facebook, you'll notice, rounded out nicely, and then had a
which is what right here, this Pocket Pivot right here, Dr.
right there. And I really like that kind of action. We've seen this action in a number of IPOs, hot IPOs over the years. And they're completely viable, and you get a lot of time value for your money because they're IPOs. They tend to move pretty fast, provided the market's moving higher.
So there you have it. I should point out for those of you guys who might be interested is that we do have a Facebook page, Stock Market Timing Pros. That's our Facebook page. Has some of our interviews and articles.
We have this one. I think we have three. We have this one, and then we also have one on the book.
Right.
And then we also have one on the website.
Right. So you can check those out. Are they all linked to this one, Dr. K?
They should be. Yeah, they should all be linked. Yeah, I believe. Okay. When you go when you go to my profile, you should be able to see all these other pages.
Right. Okay. But anyways, I just thought I'd point that out because we do get questions about that. All right, so continuing with this, so we got Facebook, as I like to deride, it's Fakebook. Mellanox, pulling in. I think it needs to pull in, so we're watching that. LinkedIn, just testing the 50-day moving average. You had I don't know, this one doesn't count here, but I think you had like a Pocket Pivot type move up through the 50-day moving average. It's coming straight up, though, so obviously it needs to pull back. I'm wondering, though, if this isn't viable. Actually looking to add to my position in LinkedIn, and I bought it actually down in here as it's coming up off the 10-week moving average, mainly because I didn't see much selling on this little pullback in here, and having been short the stock, and this is one of the ways that I use short selling. If I'm short something, I get a visceral feel, so having a position on the short side, and so you get a sense of the fact that it just doesn't want to go down, and I've noticed that as the market was getting weak back in, say, late May, early June, Facebook was not wanting to go down, and you pick up some heavy volume here, but you close in the upper part of the range, and you pick up some volume down here. Yeah, it's above average, but it's picking up there a little bit. But notice how you're closing the upper part of the range. So I noticed as I was short that this thing's getting support. Somebody likes the stock down here. It may not be me at the moment, but somebody is buying it. And it just doesn't want to break. So what happens is if I start to see it come back up and then pull back constructively, I may go along the stock just to test it out on the other side. And that one has worked out. And I think that you need to keep your eyes on this because I do think the stock pulling back in here might become viable. So you keep an eye on that. But that is one way that I will shift. And you guys know that I told you back in here that I wouldn't be shorting Facebook, or not Facebook, LinkedIn here. I wouldn't be shorting Facebook back there either. But I wouldn't be shorting LinkedIn here because it just doesn't really seem to have any downside. And I thought that everything else, for the most part, has been played out to the downside. And while that's not always clear, you start to get a sense of things being played out to the downside, and the need to sell gets pretty obvious. So I think today you got some panic selling on news, and the market's already been up pretty sharply for a few days, like some of these stocks, and so it's entitled to a little pullback here, and we'll see how it pans out. And just because the market direction model comes out with a buy signal and you drop 1% right after the signal, that doesn't tell you anything. 1% is really, you know, as Dr. K and I like to say, we like to refer to milk fat. 2%, you know. So I think down 2% after a signal, and not a big deal to us. You know, maybe it's a big deal to you. If it is, then you shouldn't use the market direction model. You might want to try dividend-based mutual funds instead. Okay, and they'll go nowhere for you. But of course, you won't have to sit through anything uncomfortable or unpalatable in the short term. So markets have risk, people. So accept that or get out. Any case, I notice Apple holding the 50-day, and you notice even on a day like today, this turkey doesn't want to go down. It's down $2.18, 0.37%. I would think if it continues to hold well, that's probably a sign for the market. But another thing to watch out for, and this is something I'll watch during market pullbacks like this, is you'll see the best stocks hold up, and then at some point during the day, you see them kind of come loose. And I don't know if you guys noticed, but a little while ago, LinkedIn to me is one of the best stocks. And then you suddenly saw it come loose and the market comes down 150 points on the Dow. A lot of times, this is a 5-minute intraday chart, a lot of times when that happens, they start to get the best stocks. Once they start going after everything, now you know you're kind of getting to the lows of the pullback, if that's all it is, okay? And that's one way to tell, and I often look for that. So I keep an eye on Apple, actually own a small position in my IRA, and it's acting okay, but so far they haven't gotten to it, and it's possible you may have a pullback here where they don't get to Apple if the market turns. But we'll see how things go. It's still early in the day, a little bit past halfway through the day, and we'll just have to see how things pan out. People ask about this name all the time. This thing's just going nuts, so there's no basis for selling it. It may need to build a base at some point, but you could have said that in here or in here. And I know some people asked us about it down here, and we obviously didn't know what the hell we were talking about because we didn't care much for the stock, but look at the move this thing has had. So there's a big leader in the biotech area, and it's, I think, mostly a news-oriented play because the numbers don't look all that great, and that was one of the reasons we didn't like it, but that just shows you how much we know. And I might also mention that, Neil's done a lot of work to talk about the last 3-4 quarters earnings accelerating up more than 20, 30, 40%, blah, blah, blah. But I think these days everybody sees that, and I think a lot of situations can be more forward-looking, and so you should not only be cognizant of the last 4 quarters earnings and sales growth, but also what is the story potential for the company, what is the market like for their products going forward, is there potential for them to penetrate their market, and what are the estimates going forward. And if you look at some of these stocks, they look like the last 2-3 quarters and not so hot, but if you look at the estimates going forward, you can see that there is something there. And particularly if it's a dynamic situation, I think Equix is a situation like that, where you have pretty good estimates after this year, but I think the next quarter they're expecting -6 or 8% earnings growth, but after that it starts to pick up into triple digits, I believe, over the next couple, 3 quarters. So I think this is a forward-looking situation. This is a very volatile stock. And you have to understand, you come straight up off the lows here, pretty much off the 50-day moving average. You run up to new highs, and now you pull back. The company did have an analyst day the other day, or an investors conference, and I'm not sure what that was all about. If any of you know, don't tell me. I don't want to know. I'm just watching the stock. So it's flipping around in here. I'd look for it to hold the top of this base. But as Dr. K would say, probably if you own it from anywhere down lower, you're probably using the 50-day moving average as your selling guide. Right, Dr. K?
That would be correct. That would follow the 7-week rule.
See, I know how the guy thinks. Been working with him too long now, right? We're like an old married couple at this point, anyways. In any case, let's go through some more. Monster gets downgraded on Tuesday by another value-oriented or valuation-oriented analyst. But again, the stock's had a big move. It's not violating the 10-day moving average. You might say violated it here and in here, but notice how it does seem to close above the 20-day. So I think if you own the stock, you're just giving it some room, but it probably at this point, given this steady trend, is going to need some sideways action in here somewhere. So that's one that looks good. This Nation Star Mortgage, someone mentioned this last week. I kind of I don't know. But looking into this, there is some decent institutional sponsorship in it, so it might be a real stock. There's a couple other stocks in this mortgage servicing area where basically these companies get paid a few basis points to service loans, which means they make sure that the payments go to the right people and whatever else needs to happen, that everything's nice and copacetic, whatnot. A little V-shaped here, sitting up above the 10-day moving average, kind of extended, but it's acting pretty well. I also like Coinstar is interesting. You had a pocket pivot, I believe, here off the 10-day moving average. There's another little pocket pivot right here coming up through the 50-day, but it's a little V-shaped. And notice how that straight down, straight up, and then it takes a couple of days to back and fill, and then finally more. I would keep an eye on this one because I like this use of kiosks as a direct-to-retail model, and as you know, they're using it for, is it not Starbucks, but is it Seattle's Best Coffee, I think? So it is innovative in that way, and they've also shown that it works very well with Redbox, where you rent CDs. I know Ross Haber, our portfolio manager for the Managed Accounts program, who's lounging in Saint-Tropez right now, is a big user of Redbox, I guess, and so that model seems to work, and they're trying to push that model out as a direct-to-retail model. I think it's a dynamic situation. Earnings were up over 200% in the most recent quarter, so I think you got to keep an eye on this one. Maybe it builds a handle, and this would be consistent with the market going sideways for a period of time here, while some of these stocks catch their breath, or continue to build their bases and complete them properly. Okay. Questco we talked about acting well. I'd love to see it pull back down in the 48, 49 area. Ulta Salons, Dr. K says this is one of his favorite stocks. I believe him, and it's a good stock. And got a viable gap up here. Looks like a pocket pivot right here, and backing down to the 10-day moving average. Dr. K, is this viable here?
Yeah. Again, it's another constructive pullback, so it's within range of where the pocket pivot was issued. So it's still looking good.
So so there you go, and that's entitled to a little. That's a nice move. It's trended from here to here, and it's just above the base, and needs a little time to hang out. So to me, doing what it should be doing. Splunk, I like Splunk just because I like the technology. They don't make any money, but they got a huge opportunity ahead of them. I think it's just an interesting name, just one I keep an eye on. Okay, SolarWinds. This one had a pocket pivot coming up through coming off the 10-day moving average and coming off of the 50-day here. Now it's backing down. It might become viable in here. It's a little bit of a squirrely name, but you did have a viable gap up here, which we alerted you to, and you tested it and held. And so right now, I think if you own this stock, you could use either. What would you do here, Dr. K? Would you use the low of the gap up there? Or would you use a 50-day moving average as your selling guide?
I would use a violation of 50 days just because it's been quite some time since the stock gapped up.
Okay, and we've owned this stock, but it's a real pain in the ass. I mean, the thing's really volatile. Cerner we talked about. I'm watching Fire. See, Fire's another one. It's like SWI. It had this sort of pocket pivot move, and I think that just was enough for a pocket pivot right here, which it's already extended. Pulling back, building a base, but I think that's a good little tech name. SXCI. This is like Cerner. I would be wary of this one, though. I don't really care for this action. Dr. K, you got any comments on this one?
Yeah, you had a high volume reversal 3 days ago, or 2 days ago, rather. So I don't like that. That's again, it's just out of its base. So this stock should work if the market's going to uptrend from here. SXCI should be just fine. But I really don't like that kind of reversal action on high volume. So on a day like that, I often will you cut half or the whole position entirely, just because it's very high probability that's going to go lower. So in other words, you'd sell 2 days ago. If I'd owned this, I'd sell it 2 days ago, and then on a day like today, I don't know, I probably wouldn't be buying it back here, but you could do that, and you could have saved yourself a little bit of money.
Yeah, myself, I don't care for it either. I think in this market they should be holding up better. I'd say look at anything that's up today. PCYC, the big leader, Facebook, is acting pretty well today. And so that's where I think I want to be in the stocks that are holding up better. You're noticing LinkedIn is trying to rally back above the 50-day moving average. I think it's just above it now. 50 days, 102.91, so it's hanging in there pretty good. Let's see, Cyclone, is that what this one? Yeah, I thought this is an interesting name. They have great fundamentals, and you can check on this. You can go to MarketSmith or wherever else you get fundamental data from. We use Wanda. But they've got nice earnings growth. The only thing I wonder is why is this thing so cheap? So
yeah, it's a big red flag. It's also a small, very small.
I want to make sure that's the one I'm thinking of. Yeah, 60% in the last quarter and 102
great earnings.
Yeah, I mean, it's 9 times estimates.
Is very strong. It's ranked second among all the industry groups. So
yeah.
The numbers look too good to be true. It reminds me of those Chinese stocks back a few years ago that had great earnings, and yet they were still trading in the teens, and they couldn't seem to get going. and then they have these little
No.
bursts, and then they would just fizzle out. So I'd
Yeah,
be
so
careful
I'm
about
wary
this.
of that. If it's such a great fundamental story, and obviously you could see it for yourself if you look up the numbers, so everybody knows it. Why isn't the thing doing something? That's what makes me. But I'm keeping an eye on it. Web.com, you have pocket pivots in here, another pocket pivot here, pulling back to the 10-day line. Maybe it becomes viable here. Nice breakout here. Stock's acting well. It's another one I'm keeping an eye on. Cinecore, this is a company that makes a platform that allows content producers to put their stuff up on the internet. So a cable company could put up video, or a movie producer, like Sony or whoever, Paramount Pictures, can put their movies up using this platform. And they have a couple of competitors, but there is potential for growth. But this one's been acting okay. Some people have asked us about this. It probably needs to go sideways, but you can see it's a little squirrely. So I don't know. Again, $12 stock. I prefer higher price stocks. Fortune Brands Home and Security. What a dog! This thing's breaking down. It was trying to come up. You had a pocket pivot here, but notice how erratic it is in here, and then you start to break down. I don't think you want to be sitting around through this one because it's getting raked thanks to the weak housing numbers. Housing start numbers were pretty weak today. And I personally don't think you're seeing a recovery in housing. I think that's kind of smoke and mirrors right now. And I don't think you'll ever really see the type of housing market that we saw in the 2000s. So I think that's a pipe dream, and there's a huge amount of inventory out there to still be worked off. And any movement in the numbers to me seems more massage than anything, statistical massaging.
Yeah, also, it's interesting that home prices in the U.S. continue to lag the other parts of the developed world by quite a stretch.
Yeah.
And so, all this idea about housing is recovering in the U.S. And all the demographics and all the studies that I've read say that housing prices are going to be, kind of in a quagmire for a number of years before they really start to get going again. And right now, home prices in the U.S. in various places are proving that out so far.
Yeah.
But we'll see.
I don't know if anybody can hear the neighbor's dog, but boy, he sure is loud. Whatever. Maybe he's just telling us what the market's doing today. Let's see. You look at some of the things like Amazon is trying to come around. You look at Intuitive Surgical, and it's trying to come around, and Apple hanging in there still. Now they're starting to hit it a little bit more. We're coming down a little bit more here. I'm noticing my name's still relatively holding up relatively well. Google is a dog, so I'm not really interested in that. But Priceline is coming around, and these might be trying to build bases. So you want to see how things go. Anyways, that's kind of what we see in the market right now in terms of what we're looking at. And all I know is if I'm up pretty good in the last couple of weeks and up sharply in the last week or so, I'm going to try and hang out on this pullback and see what happens. Just watch my stocks. And if you aren't in yet, or if you haven't bought any stocks, you might look at using this pullback, but don't get in too heavy. Just work yourself in slowly and keep your stops in mind and let the market prove itself out. I've done that over last week, and fortunately for me, I've had some big moves in Mellanox and Facebook from my original entry points that have got me in a little more. So I actually got fully invested pretty quickly, and today I'm ready to go on margin to start picking off some of these on a pullback if it's going to work. So that's kind of what I'm looking at right now myself. We'll see how this pans out by the end of the day because the situation is fluid. But I'm definitely not in any kind of panic mode. You just got to let things pan out and play out as they're going to, understanding that we are entitled to a little bit of a pullback here. Somebody asked about, I'm going to go through some questions because we've got about 15 minutes left here. Costco, it's up. So, again, up a bit. It looks like it pulled back down to 90 or so, possibly. I noticed some of these have done pretty well, but I'm not all that convinced that I want to be owning these as dynamic new leaders. I want to look for the stocks I think got doubles or triples ahead of them. Maybe that's a Mellanox, maybe a LinkedIn, maybe a Facebook. I don't know. Maybe any of these that we've looked at previously.
And Costco is very sloppy on the chart. I mean, it doesn't doesn't obey the 50-day, but it sometimes comes to the 200 as well.
Yeah.
So it's too
okay, Dr. K. Let me bring up the. Let's bring up the Nasdaq because we're gonna get some questions questioning you and your judgment in the market direction model. It is you just arbitrarily throw a dart and come up with a buy, sell, or neutral signals. Isn't that right?
flip of a coin kind of thing.
Okay, answer this question. Dr. K looks at range of the bars as one of the criteria for the market direction model. The whole up move had narrow ranges compared to down moves. Did that play into this tepid MDM buy signal at all?
Someone's saying that the up move had shorter bars than the down move, or longer bars?
Shorter bars. I mean, here's the up move. I don't
well,
really see.
Down moves are going to be more volatile generally than up
Yeah.
moves, and if you can't use that as a rule because you would miss some of the greatest market follow through days, which as long as they're up that threshold amount, the market might have come down very sharply and steeply with big bars, but once you get that threshold, you hit that threshold, and your leaders are verifying that threshold level, then you should be buying on that day. You should be at least buying, acknowledging that is a legitimate follow-through day. Now, I mean, in this current environment, as I said, we're very flexible, and you have to be very flexible in these kinds of environments. And you had an accumulation of events that speak to potentially higher trending markets. And those are a number of things. I mean, you had the central banks come together and say, okay, we'll take care of Greece if it falls apart, or if there's any crisis situation, we're gonna step in. The Fed has said that about QE3, and there's a number. You have the Romney factor that markets are forward-looking, and so that could prompt a rally ahead of elections. You have Obamacare, which may get defeated, and the thing is, as someone was saying, if whether it goes through or is defeated, the Fed has already you've got QE as a huge safety net. So there's a lot of positive arguments as to why we should continue to move higher, and I'm very pleased with the way a lot of we've hit a lot of pocket pivots in the last few days. So that's one big clue. Pocket pivots, of course, from stocks that are high quality, leading stocks. Of course, Apple has been holding together very tightly, and so there's lots of good arguments that speak for a continuation of this uptrend. And if you look at the Nasdaq in general, it had been on a downtrend, but just ever so recently it did break that downtrend to the upside. So odds favor a continued upside. We have an accumulation of negative events today, and I think the most powerful negative argument is potentially is recession looming. It certainly is here in the UK, and it is hit more than half of the Eurozone countries, and everything's connected. So I think it is probably a matter of time before recession does catch up to the U.S. But again, that could be months down the line. It's very hard, of course, to time when recessions begin and end. So
right.
In the meantime, we're just going to be in the present, and we're going to say, well, obviously there was enough favorable action overall for the model to go to a buy signal, and that said, the model is, the fail-safe is going to kick in. If it kicks in, then the model moves back to cash, and we wait for the next setup.
Right. I forgot what I was going to say here, but. Keep in mind also that economic data is not coincident or shall we say or looking forward or forward-looking. It's lagging. So market reacts to economic data looking forward. So anything occurring now is not really what the market is discounting. So I think it provides a nice excuse for things to pull back and profit taking to set in. So that may be what we're seeing here. Somebody says, I think this is interesting. My 28-year-old daughter reports that there's beginning to be a backlash against social media as being too time-consuming and trivial. I do think that if you get carried away with it, yeah, you're probably wasting a lot of your time. But video games can qualify that way as well. My 13-year-old daughter reports to me that at her school, but of course, you got to remember she's in a private school with 40 kids in her grade. If you have a Facebook page, you're considered a loser because you don't have a life. And I explained to her, well, people don't have lives. People are life. So I'm not sure how that one applies. But that's kind of how they're looking. And I can see that that's the case. So, but I notice more and more of my adult family members and friends, and I use my Facebook site primarily to stay in touch with family and friends, which I find it very useful for. I notice more of them are coming on board, and it seems there's more of a mature approach to using it, because I honestly believe there is value to Facebook, not only in terms of marketing, because we've proven that with our own business, right, Dr. K?
Absolutely.
Yeah,
I mean,
but also with keeping in touch with friends and family that you haven't talked to or don't talk to very much. And I think actually technology, unlike Alvin Toffler's book from the 1970s, which was what, Future Shock, where he contended that technology would drive us apart. Really, technology, in the case of Facebook, brings us together. What were you going to add there, Dr. K?
Yeah, I was just going to say that I see all these social dynamics in terms of or opinions rather on these social media tools, and that's all they are. They're tools. So it's just like anything. You can abuse it or you can use it. You can enhance your life. You can also waste time. And there's people who use Facebook as just a chat social medium. It's sort of like if you want to chat on the phone all day to all your friends, that becomes a bit of a time waster. And certainly all these media programs can be used as such. But you could also, I use Facebook just to optimize my life because I don't have, time's my most valuable commodity. And so what used to take me, say, 30 minutes, I can use now Facebook for. It takes me maybe 5 minutes. So it's a great improvement there.
And you stay in touch with more people, So I find it useful that way. Now, I might argue that you don't want kids on it so much. I think advertisers want to see more adults using it in shall we say, more adult ways. Wait a minute, maybe I don't want to say that, but more mature ways, and that's kind of the way I use it, and I find it valuable that way. I don't spend more than, say, I might check my Facebook page in the evening for 15, 20 minutes, put a couple of things up if there's something going on, and that's basically how I use it. So I don't really see that as that there has to be a backlash. I do think kids shouldn't be spending so much time on the computer, mainly because they're not old and slow like the rest of us, and maybe sit around more. They should be out doing things. Anyways, let's get back to stocks. People asking about a line. Same thing. You have a breakout. It's pulling back to the breakout point. So not really anything exciting. We talked about Ulta. Somebody says, Gil, do you and Dr. K have any opinion on McDonald's? I don't touch McDonald's. I'm gluten-free, and McDonald's looks like just a gluten nightmare to me when you look at the food. But that's just me. My opinion on McDonald's is a piece of crap, and it has been for a while, and if you can't see that, then you need to have your eyeballs examined. So it's certainly not a buy here. But the stock violated its 50-day moving average a long, long time ago, so it should have been sold on that basis. So you have to apply rules, not opinions, to stocks. So it's not a buy, and if you're still holding it, I don't really know what to tell you, and I'm trying not to be a jerk today, so I won't call you stupid, at least not outright. How about you, Dr. K? What's your take on McDonald's?
Well, actually, this goes back to something I think David Ryan said back in 1997, something to the effect of there was some client who was holding the stock that was trading well under its 200-day, and he said that guy needs his head examined. And that just kind of stuck in my head. I mean, in this kind of situation, you don't want to be sitting on a stock that's clearly broken the 200-day. If you're a very long-term holder on a stock, I could see someone using the 200-day as your selling guide. But this thing is clearly trading under the 200. It doesn't look right by any stretch of the imagination. And so this is good. Whoever asked that question, it's a good learning experience. Never ever hold a stock that's clearly violated the 200-day moving average.
Right. Even if it is McDonald's. So somebody makes an interesting point, and this may be a reason why some of these medical stocks like Cerner, which is highly dependent on Obamacare, I think, and SXCI, I'm not sure what they're dependent on in Obamacare, but it's possible, as this person says, it seems like the pros are ringing the register at new highs on SXCI and Cerner with Obamacare ruling looming, and that may be true. Just take profits if things are up. If there's a decision that doesn't quite pan out, then your stocks may come in. So, what are alternative entry points on FB since Pocket Point? There aren't any. I mean, stock's just hanging out. It's building a little handle here, and maybe that gives the 10-day moving average some time to catch up, and then maybe or maybe I don't know. Well, how many days does it trade? 23. So maybe 10-day catches up, and maybe you see another pocket pivot. That's what it would take. A few of these leaders are about to cross the Livermore Century mark if rally continues. ALXN, Ulta, SXCI. Yeah, I mean, we'll see. I wouldn't really base anything on that alone. If Apple closes in this area on Friday, would it qualify as a 3-week tight pattern? It's pretty tight in the base, so I wouldn't really call it a 3-week tight pattern. I would just call it tightness within the base, which I consider to be constructive. So that looks okay. TCBI, that's the Texas Capital Bank shares, I think, and it's had a move and it's been acting well, but it's a bank. We've talked about this. We don't really get excited about it. Did CF exhibit a pocket pivot or a Bible gap up on June 19th? You could call that, I guess, a pocket pivot. What would you call that, Dr. K?
Yeah, it's a pocket pivot, through the 50-day moving average. But again, this stock is slow, so I would not be a high-quality pocket pivot.
Yeah, and we talked about FBHS, so that's a turkey. You don't want to be touching that. Home Depot is just pulling back. A lot of these stocks is just little wiggles. I mean, go back and look at a stock's pattern, and you can see all the little things that happen in here. Sell off here, gap down here. All this stuff, and ask yourself, is this within the context of the overall pattern or not? And that's kind of what you look at. So when you see Home Depot, nothing really bad there, but again, they're probably selling off for the same reason this one is. But this one's looking a lot uglier, and that sort of move is not really within its normal behavior. So on that basis, I don't think I'd be touching Home Depot. Where is the market direction model failsafe set for the current buy signal?
Right now, we're pretty much looking at, it's getting pretty damn close. So we're about, on the NASDAQ composite, we're really only about, looking like about 1% away. So if tomorrow's another weekday, we'll probably move to cash.
Yeah, and if it doesn't work, it doesn't work. So nothing to cry about. eBay, it broke out and it's pulling back to the breakout point. So, Gil, would you say that Apple's another person asking about 3 weeks type formation? And it's trying to tighten up within the base, so you need more evidence. I'd like to see some kind of pocket pivot move. But Apple could go sideways as the market goes up or goes down. I don't know. So it's still a fluid situation, but it is continuing to build a base. So, Dr. K, if one has not taken the market direction model buy signal yet, can you contrast the TQQQ versus the TYH? The TYH, since it is tech and tech looks weaker or as weak as TNA given the revisions of GDP through 2013 Q1. Okay.
They want to contrast TQQQ to TYH.
Yeah.
So they want to contrast the Russell 1000 technology to the NASDAQ composite.
I guess that's what they're asking. I mean, you can obviously see on the chart right away that the NASDAQ itself is outperforming the TYH. So, but that also argues for the fact that you have biotech in there doing really well. A lot of biotech stocks are on the NASDAQ index. And so it's outperforming in the short term. I'd rather be long the TQQQ than the TYH.
Right, because, NASDAQ's clearly going to be the outperformer based on...
Oh, here's a good one for you, Dr. K. What percentage of MDM decision is objective versus how much is subjective discretionary?
Well, the only discretionary part of the MDM is the type of ETFs and the position sizing and the pyramiding style and whatnot. So that everything that leads up to the signal, though, is price volume action on leading stocks, major indices, and also there's some other factors involved that in terms of how price volume responds to like certain news events and things like that.
Yeah.
But other than that, and of course quantitative easing, we follow we've been following injections, QE injections, in 2009 since they started. So that obviously plays a role also, and there's technical, again, it comes back to price volume in terms of like post 2010, post May 2010, after the flash crash, the market historically tends to go into a fairly choppy phase that can be quite unpredictable. So the model actually held off on a number of signals over the next the ensuing months, which is why if you go back to the results, I think there was only one false signal during that period, simply because the models could sense that there was not enough of an edge. It's more like flipping a coin, when the market is that erratic, and so yeah, I guess that answers that.
Somebody asked if you know what, I got the wrong. Let me get rid of this guy. Liquidity Services is a late stage failed base. Well, I mean, you can see if this is a flag or base formation, it's failed. But I wouldn't short this one because it only trades 600,000 shares a day. So. Let's see, Walmart. It's hanging up okay. It's looks okay, hanging along the 10-day moving average. Nothing exciting there. But not breaking down. Dean Foods, is that what that is? Same thing. Looks like Walmart, doesn't it? Pet M. I don't know. It's been holding the 10. I don't know. At this point, it's hard to say. What do you think of this one, Dr. King?
It's it had a great Bible gap up there. It's looking all right. It seems to, in this kind of, it looks fine. I mean, I like the stock. If you're sitting on it, use your sell rolls to hopefully keep you in for a longer pull, because it's looking pretty good.
Yeah, I like this. Gil, thanks for being gentle on me on McDonald's. I was gentle. All right, so. Does that mean I can grab you more next time?
Actually, because David Ryan was ready to rip the guy's head off back in the days of O'Neill.
Yeah. You stupid moron! What the hell are you doing buying McDonald's? How's that? Anyways, I don't know. Some people like to be abused. They're just that way, Oh, let's see. I don't know what else here. Expedia. Expedia is probably still making me wish I owned it. No, it's hanging in okay. Looks okay. I mean, it hasn't violated the 10-day, so hanging in there. It gets supported at the 20. It's like I said, my thinking is you're getting a pullback here that you need, so it's going to look a little ugly in the short term, and just watch your stocks. If it looks like they're acting okay, then you can just kind of hang with them. So, has Dr. K given up on the VIX model?
No, absolutely not. It's I've actually been.
Oh, give it up, will you?
Yeah, model. I mean, obviously there's there's a lot of research studies that I do that I shelve just simply because I reached that endpoint. I realized, oh, you know what? It's done. There's not going to be something that comes of this, and that's just the nature of research. But for several projects that don't work, one will work. I still have a big belief in the UVXY working, and actually I'm starting to see light at the end of the tunnel. So I'm still carrying on my research studies, and what I hope to see is we're going to see that results table, which is in beta right now, and we're going to start to see a lot of positive returns populating that table. That's what I'm anticipating, and this again is based on the back tests, which don't lie. I mean, I've scoured the back tests just to see if there's any holes in what I've done, and I can't find any. I think the reason, part of the reason with the UVXY issue is that the markets right now have been quite unusual. Now, I think these unusual periods, because I've gone back over other unusual periods, and so the model has actually had in the back test some serious drawdowns, and that's what it's going through right now. So I don't see now as being any different from those difficult times. And here's the other problem. Since it's beta, there is operator error. That would be me. And I have not taken a couple of very profitable signals. I just didn't feel the model should go into a buy or sell situation, so I kept it in cash, and those signals turned out to be very profitable. So anyway, it's frustrating, but it's a lot of fun, and because I'm starting to see the light at the end of the tunnel, and I think once the market ends this unusual period, I think the model is going to start performing very well. So. Famous last words, but we'll see how it goes.
Okay, I guess it must be better living through statistics. So, but I just want you guys to know, don't send any emails harassing Dr. K. He gets plenty of harassment from me on that one. So, right?
Actually, it's interesting. I'm really I have not received any negative emails on you. Well,
no,
we don't really get very negative emails are very rare to begin with, but as far as the UVXY model, there's only been positive emails, or just I guess very encouraging emails. So I thank the members out there for those emails.
Yeah, and surprisingly no, but I think most people understand that that's in the beta, and it's still a crazy model because if you understand the TVIX or the UVXY, if you ever watched it trade, they're crazy to begin with. So I think I'm gonna finish with this because I think this is because 10:35 already. We've done this for an hour, so we're ready to wrap it up. There's more questions, but can't get to everything, but I think this one is, somebody asked this, Dr. K, I'll let you finish off by answering this. If a stock falls below your 7% stop loss, do you sell immediately or do you wait until the next day to see if it breaks the intraday low of the previous day?
It's contextual. I've sometimes kept the stock overnight because I believe it will rebound from that level, but that said, if I do have an absolute, I'd say the general rule of thumb is if your maximum stop loss is, say, 7%, and it goes below that level intraday, you should be selling it just without question. Just sell it because you don't want to start. Here's the thing: 7% can turn into 8, 9, 10, 11%, And the other problem is that overnight the stock can gap down on you as well. Maybe it's telling you something in the chart that something's not right. So I would generally adhere to your stop loss rules and not develop bad habits of letting one slide. And that said, I have broken that rule before, but it has to be a contextual situation where it could be a situation where the stock goes straight down through it. I don't even have time to react. Goes straight down through it and straight back up. So in other words, it's pierced the 7% or whatever your percentage is, and now it's only down 6%. In which case, I will hold on to it and wait. Maybe it's going to go up now. Maybe it's going to go higher from that level. But if it goes below the 7 again on that same day, then I generally, I'm generally out of the stock. It's just not doing what it should.
Yeah, that's my view too. So on that note, you guys, you can see we're moving to new lows. So again, just keep an eye on your stocks and see how things act and whether they hold up. I do think you can go through some volatility here and still be okay. But we'll just see how this develops as the day progresses. If it gets a lot worse, then I think you have no choice but to back away and at least not be on margin. So where I'm looking to get on margin, maybe on this pullback, if the market can hold, I may raise more cash and just back away and take some profits in the short term if it starts to deteriorate. So we'll just have to see what happens. Anyways, that's all we got for now, you guys. Thanks for showing up. I hope today was helpful. Trying to keep our head, but all you can do is watch your stocks and operate on that basis. Try not to panic. Just kind of keep things in perspective here. Remember that we are up a bit, so we are entitled to some pullbacks. And I figure if I'm down 1 to 3% of my portfolio today, that's pretty tolerable when you figure I've had some days over the last couple of weeks where I've been up 10% or more in a single day. So to me, it's all within context right now. We'll just see how this pans out. But you try to keep your head and stick to your rules, okay? That's all we have to say, you guys. Good luck, and we'll catch you next time.
Take care, everybody.